Okay, Delbert, fire up your screen share and see what you got.
Okay. Now, apology. I'm going to share my trading view here now. Apologies, it's a bit messy. I was highlighting positions, but let's see. Where's my zoom?
No worries.
Share screen, because it was trends and everything I was using, which clearly I think were incorrect. Hopefully now you see my trading view.
Mm-hmm.
Basically, what I've sort of done here is like different circles where I took trades, and some being okay, some being not so great. And I think one of the big issues I have is, I suppose, I might take an inverse and come back and test it again. I get scared, I get out,
Mm-hmm.
So on this weekly, I tried to take that weekly. For instance, I saw it going up. Actually, I had some margin. I ended up getting kind of liquidated, but then I was like, okay, I think it's still going to go down, So I saw it come back down here. I took an inverse here. It came back down. I thought it was hitting its leg, and I don't know if I'm getting my legs right here,
Yep.
And then it started come back up again. And I was going, oh, good God, it's going to go rocking it again. So I got out for a little bit of profit, Then, of course, it fails down.
Yep.
And I'm going, heck you. I took a bit of an inverse here, which actually got something here, up and down sort of idea, left it, So a lot of times I will say take an inverse. When it comes back to hit it again, I get out in a loss, and I'll see it going the way it probably would have gone. Now, that was that thing here. Later on, it's kind of even times, unfortunate moment is mainly where I'm kind of trading. So next time I was over here looking at this. Now, I was very much looking at this daily trend from up here, which maybe necessarily wasn't the correct one that I was adapting out.
I think it's good.
Yeah.
We haven't done a crazy amount of work with trends yet, so we'll get into trends in the future, but it looks okay to use.
Yeah. Okay. Cool. So if I go back to what was this one I was talking about? Yeah, this one. Okay. So then we're coming around here. I was looking at this particular trend from down here coming up. And there's a sort of trend here. There's the daily, obviously, here, this daily uptrend. But I was looking at a sort of more local trend here and going, okay.
Yeah,
it's coming back, it's hitting its hold, it's hitting its leg, surely it's looking to break down. So I was seeing it here, it bounced off trend, it came up, it hit this hold level. So I said, right, maybe it's going to inverse off this. It did. It inversed off it, great, went down, hit trend, broke trend. I was going, hallelujah, whatever that word is.
Yeah.
But then, of course, it zoomed back up. And as I was telling you, gotten, this whole, I used to play trends a bit before, but now it's like, oh, bugger, it's hit its greediest hold. It's now about to rocket the Jesus up.
Yeah.
It came up here. I again sold out in a loss, a little bit of a loss.
Yep.
It fell down.
Back down. So a bit of information overload, which is normal. It is completely understandable because the amount of information I hit you guys with is just, it's hard to keep up with. So a bit of an information overload. Almost, you think you probably might have even made more money had you had less knowledge. It might almost feel like that. So that's quite okay. Actually, this is very normal
in some ways. So then when I saw this trend actually break here, I did inverse here, and I managed to get that at least.
Oh, good.
So that was great. That was a very good, and that was one of the. So I know Pickles, that same idea. I had been doing things where I left trades overnight and they went badly against me.
Yep.
And I think a lot of it is obviously not, really knowing what I'm doing. But this particular time, it was just, I was so raging, I kept on missing this damn thing. I said, right, that's it. It goes or it doesn't, and it worked out.
Yeah, sometimes we do get into that mindset of it's like, well, I just got to pick a spot because you can make a few mistakes in a row, and what could have been 2% is minus 0.5 points off. So what could have been 200% profit is a 50% loss. And so sometimes that is true. We come to a point where we just do get emotionally frustrated and say, I've made this decision enough times and I keep making the same mistake because I should have stayed in the short. And then when I exited the short, I went long, and then I should have went long. And so we always seem to sometimes go into these modes of where it's, almost as if we traded everything we weren't supposed, if we did the opposite of what we thought, we would just be doing nothing but making money, right? So sometimes we do get into these emotional battles. So again, that's perfectly normal. Neutrality is not easy, not an easy thing to accomplish in this profession, but so we work towards it, right? Your problem is targets. Your problem is going to be what we talk about today, polarization in these trades. So I'm almost wondering if
there's another one here over here.
I was going to say if you have another as well. Because those ones are pretty straightforward. That's just a lack of targets, which is going to be what we talk about today as well. So those ones that you showed me are pretty straightforward.
Well, from a target point of view, I was targeting down here. It was coming back up as if it was going up. So it was the
whole not knowing. You're not understanding targets because you don't have the right moments defined.
And then over here, right below, before this lovely move down, I got in short here. I was looking at that.
So show me where you got in short. Show me. Go to the moment, like the timestamp. Like zoom in for me. Let me see what you were doing.
Twice. I got in twice. Once I got in, exited with a loss. So I got in here because I was looking at this daily trend that was kind of jumping up about. I had marked another trend up above it.
Okay. So zoom in for me in that region there. Make your screen a little bigger here. So slide the there we go. Now make it maybe in the middle of the screen here so we can kind of see both sides of this thing. So if you go to okay, good. You know how to do that. The bar there. Yep. Make it bigger, put it in the middle of the screen. Okay, so show me where you would have longed and shorted here. Like tell me where you would have longed and shorted.
So what I was doing again, I was looking at this trend. It was coming up.
This yellow
fell
trend.
Down.
Okay.
Yeah. This hourly, I was going okay. It's going down. It's pretty much gone. But then I saw it going up above it, and I was kind of thinking, right, maybe this is its whole situation where it's going to break up and then break down. So I shorted here. Okay. There was a sort of greedy level there, and
it looks like a good short to start.
Yeah. And then it sort of bounced around, but then, of course, the usual came up above my level. I got out.
Okay.
It then bounced around, fell down again below this, and I entered again here, and actually caught.
So do me a favor. Take the replayer tool and cut it off kind of just outside of your red circle there.
Here, like.
Yeah, perfect. Right there. And switch it to a 15-minute time frame for me, and let's see what's going on here, a different time frame. And zoom in a bit here. Let me see the top. So, okay, perfect. So what I want you to do here is take my annotate tool. We have the leg of the move right here, right? So we understand that the range is somewhere between the leg of the move, and we can even just in this example use this candle here. Yeah, okay, that's fine. So what I want you to do is I want you to go to a smaller time frame here.
5 or 3?
Yeah, 5 is good.
5 first.
So go over to that spot that we defined. So we know that this is kind of, what it's targeting, and something is holding it down, right? And then so fine, you're gonna have a ladder here and a ladder here. So just visually, the first thing I see is this is creating a ladder to here, and this is backtesting something in here. So what I'd like you to do is I'd like you to put a level right there. So what this does is it's creating the confine of the move, right? So we already know we have a ladder. Like you can see it visually on the chart from here to here to here to here. And you're in this moment here. So you know that in this moment right here that you're in, you are targeting something. Like your ladder can continue as long as you don't hit this, right? Because you've already had this ladder to here, and it's moved to here, and now it's moved to here. So you're creating a local ladder. So like we already have the long-term picture set, right? Like we already have the long-term picture. We have a trend here. We have a trend here. So this stuff I'm sure you're very accurate on. And so it's all correct. I'm sure it is. Whether it's in the exact spot, yeah, it probably is too. But maybe it moves left, right. I don't know. It doesn't matter. But what we do know is we have a ladder here, a ladder here, a ladder here. We have a ladder here as well. Problem is at the time frame. So as long as we don't, it would be the same as if we were, using this. Let's take the replayer tool and cut it off right there for a second. Click that candle button and then pick that point. Perfect. It's kind of the same thing. Like, look at, we know that this is laddering from, okay, so good, perfect. We know that this is laddering from here to here to here, now to here, now possibly to here. So we know that this has tested a level in here somewhere, okay? Which is fine, which is creating the ladder again. So theoretically, this can't test above this level, which is testing whatever inverse is here. So that means that this one where the big X's that I keep striking through, this one here has to hold, right? So that's what we know. So we can now go and we know where this is, and we can start going to 1 and 3 minute candles and see where our hold level is, right? So maybe go to a 3 minute candle next. Probably not going to have anything, but we can certainly, we understand where it is, which is right here is the hold level being hit. So what we want to do is we want to mark this candle back to here. So we want the right hold level. So we can see that I would mark it on the body. Could be a greedier part of a 1 minute move, right? A range, right? So we know, okay, we have a ladder here, which got inversed, creating the next ladder here. So now we're looking for something between this candle and this range here. So now we can go to a 1 minute candle. Go to that same region. We have, where are we here? Maybe go to the right a bit. Is this the one we had? Okay, yeah. So we have the correct hold.
That's where we were.
So now we can mark this candle here, right? The greediest range inside of that candle. So I want you to mark the body of that candle for me.
The green is where I was actually, doing that.
So either one, they both end up being correct, one short into the next short, which means that we now can't really go over top of, you kind of have a level right here. So mark that for me as well.
Sorry, I didn't see where you marked.
Right here.
Oh, there. Yeah, okay.
Yeah, it's that candle there, but it's the same price. It's actually going to end up being the exact same price. So it's fine whichever one you mark. They're both the same. So we know that we can't go over this point. So let's go fast forward in the future a bit here. We can delete this green line that's already tested. And we can see what we're doing in the future now. So we can actually even go back to a 15-minute time frame here. To get a bit of a better insight to this move. So you can see
some of this crap here.
What will create the ladder, right? So you can see that this blue line right here that we made, that thick blue line, this will create the next piece of the ladder down, because simply it's protecting the legs of the move, right? So this is a bit more advanced, right? This is kind of a realm of hold levels that are, getting to the scale of quite advanced. So now we have a hold level there that's on top of trend. So you have trend interjecting with a hold level. And really, you could even go up to this level here that we marked there and continue to hold this trend down by just hitting that level again. But really, I mean, I think the story is becoming quite clear and as to what we're doing as we're laddering down off these hold levels. It's just about identifying the right hold levels here. So I think your problem, you're not seeing the larger piece of the picture evolve. So in this, like, I want you to take your replayer tool and go to halfway through this candle here. Maybe 2 or 3 more back. You could even go more back, 3 more, maybe even 3 or 4 more, just to the bottom part of this range down here.
I want to get down here.
Yeah. Mistake. So now fast forward and show me the time frame. So, or sorry, not fast forward, but just stop there. Take the replayer tool, go back there. My mistake, wrong word. Completely my fault. I meant to go forward in the charts, not fast forward in the.
Oh, good. Time frames. Is that you're saying to go to lower time frames?
Just show me the right side of the screen here.
Yeah. So sorry.
Go a little bit more. Yep, keep going. Okay. Good, perfect.
Are you looking for more?
So we know right now that if you show me more of the top here, so if you just compress the chart a bit, So we know that we are simply trying to create a ladder down. And if so what can we understand about this? We're trying to create a ladder down, and if we can, it's going to distribute the move. So really your entry here should be looking to break this trend, because if you think this trend is going to break, your entry here should be catching the greediest hold level, which becomes one of these two right here, because you can see that's the leg of the move, and you saw how we got there. This information on the chart that we found is all there right now. This is not stuff we found in the future, right? So this is stuff that you could have found right now. So you have a couple different, hold levels here. You have what is the hold level long term that's being held. So you can say, oh, this is long term being held. So what's the next greediest part of this? Well, it's simply right here in these two levels that we just marked out. Really, if you're in this move trying to break this, an entry target would be the greediest part of the move, right? Like straight and simple, because you're not going to hit these little inverses right here and then fall straight down. There's more time to develop on these charts, right? Like it's not going to just be so simple where it just hits the inverse of this and pulls back and goes down. We'll hit that inverse, but it's a different part of the move, right? When you're looking for perfect entry before this dump, this is what you have to look at. So all we did was find the greediest hold level. And it's not all we did, because that's actually quite a task. It took us a few minutes to find it. But we know that as long as that level gets held, we know what the information thereafter represents. So if that level gets held, we know that the move is going to dump. So we could have already defined these points as entry points in the moment, like 73.10, 73.19. Let's fast forward a few candles, see what happens. We already know because we did this already, but let's just let this play through. Right. And so this becomes quite simple. This becomes quite obvious as to why this is going to dump where it is, because it's simply creating a ladder down, and it has a threshold that it can't go over. So that's part of today's lesson is polarization. So this is what's called polarization, which we'll get into after this. But this is a part of understanding where a threshold of a move can't go over. So one of your problems was, and Pat had the same problem, was saying, I can't let trades continue to go overnight. Okay. So this is wrong, because you can. Now, an inexperienced trader should not walk away from their charts and leave them open. But if you understand where these points of polarization exist, or these thresholds of kind of maximum tolerance, if you get entry there and it becomes true, it means a very specific set of events will happen after. Just like all the way up here, wherever it was up here where I showed you guys earlier, that 73.98 level, that or 73.88 level, because it hit 73.90 because it simply was inversing the move up here. This is kind of like a maximum threshold on the move. It's going to break over this point and go straight up, or it's going to hit this point and fall straight down. So you could have been sitting in this trade for a couple of days and just, this is the same type of polarization where it's a maximum threshold, because it is either going to hit this level and break the move, or it's going to go above this level and continue to move up and break larger pieces, right? So there's kind of like a threshold tolerance here where it's, when the event happens, there's only two outcomes, right? It either goes straight down or straight up. So if we short that level and we understand where to find that level, again, this is called polarization. If we know where to find that level, there's kind of no going back up to that level. Once that level gets hit, it's the last time it will be hit. Just like this was here. If this level up here, this one right here, if it gets hit, it's the last time it's going to that level if it rejects it, because it's a moment of polarization. This is just about understanding a bit of deeper technical analysis and polarized points, right? So this is something where if you entered a short there, you could have walked away, go eat dinner. You wouldn't even have to have looked at it, as long as the move holds down, right? You can't put a buy there and walk away forever and just expect it to be down. You have to make sure that it actually holds the move down, because what if it tests it and then slightly creeps up over top of it and starts to hold over top? Well, this is very different than if it rejects it completely, right? Very different knife catch versus this is holding over top of the move, right? So yeah, but if the knife catch happens and then so this is your maximum threshold point, right, which is right here. And then if this point is laddering off of that, like the move is done. There's nothing to look at. You can go to bed for the next 3 days and be, at peace with yourself, because you've hit the maximum threshold of the move. You've actually laddered off of the maximum threshold, just like we did up here. We have a maximum threshold that we can find, and once you hit that, you get entry, you're good. As long as this doesn't go over top of it, it confirms it, right? So it's kind of just a very nice spot to be in at that point. And then if you were to just hit play, you would see that by understanding the maximum threshold, there really is no risk of coming back up to that. And it's part of what helps this move dump so much, because there really is no coming back up to that. And you can see why now. You can see the ladder that's developed off of a bigger ladder, off of a bigger ladder, off of a bigger ladder. And when this moment is defined, you ladder off of a defined moment. It's like you're confirming failure. It's like a hold level is supposed to be failure here, and you're confirming failure after confirming failure, right? It's like multiple confirmations. And then at that point, it's just like people are just going to get out of this thing like a wildfire is happening. It's just run for the hills, because then it's gone after that, right?
My confusion there is you're saying, yes, that was a greedy hold there, didn't get up to its leg. And then here, it's come and tested, but then it comes back and tests it again, goes straight up to it again. So I wouldn't have known to stay in that trade, because I would be thinking, okay, well, these are all tested holds. It could easily go zooming up.
Yep.
And same thing here. That, I wasn't sure, you'd say this range is tested by this. So
that's foresight of the move. So that's kind of trying to understand the larger piece of the move. So
that's why I was looking at trying to ladder off this move,
Yeah. So let's talk about this for a second. So you mentioned this here, testing this part of the move, right? So what's happening here is you do have a hold level in here, right? It's kind of like the same moment that you see here and here. Like these two moments would have been confirming whatever hold level is inside of here, right? So the point being is that if you just move your screen up a little bit for me. Okay, stop right there. Perfect. So this is the kind of point that's defining the ladder. There's 3 of these in the past, right? So this is just that 7388 one we talked about. So really the key level for this, and I'm not sure exactly where it is, but I would assume it's maybe like right here is the greediest point. As long as it can stay under this, you're good, right? Because as long as it can stay under this, it's going to continue to ladder. So it's not the fact that you've tested this once and you've tested it again, so all of a sudden you're breaking up. This is kind of the same thing, right? You're working too much inside of the chart, just so you're in this moment here and looking, oh, we just tested this, which means we're testing that, which means we're not going to knife catch it because we are already first tested it once. So actually, if we come back up again, it's not guaranteed. But really, there's a maximum threshold that you're missing. Just so it's like right here, the maximum threshold for this move would be something like this. So if you start to go over this point, like you're already starting to break the move, right? Just like back in the past at 73.98, if you start to go over that, you're already starting to break the move. As long as we don't come up to this level, we're fine. And we actually could have come up to that level in that moment and then went down, and we still would have been relatively in the same position where we are taking a large move down, right? Because we are actually still in that same ladder down scenario long term. The difference here is that, okay, so when you look at this and you say, oh, it's testing here, it's testing here, really these aren't the maximum threshold points. The maximum threshold point would be here, like that 73.90, 73.70 now, I suppose this would be, right? Just like right here, kind of the maximum threshold can be no longer because you have this here. The maximum threshold kind of has to be the greediest level in here, right? It has to be kind of this 73.13, 73.19, because after that, you've already broken the ladder. So go back in time a little bit for me.
Because that's exactly what I was thinking here. I was thinking I was going to break trend and go up to that. That's what I was prepared for. I was thinking, right, it was going to go up here.
And that could have been reasonable. Like that could have been something that happened, but that doesn't mean it's like a good spot to take the trade, right? Because you have other indications on your chart, like you're breaking trend, you're close to it, you're falling through trend, you've already tested it. Like there's other indications here that showed you, like if, okay, for example, go to the bottom here for me. Let me see that bottom.
This here, sorry.
Yeah, so take this and scrub it so I can see more of this and this. Right.
Yeah, I can clear the chart.
You see how you have your level tested down here, and you have your trend from here to here. Like once you lose this trend, you're pretty much losing this encompassing piece of this move. There's nothing left holding it. Just like when you lose this larger yellow trend, you're respectively losing its encompassing piece too, right? So in this moment, like when you're on top of trend like this and you're rejecting levels, it just to me looks like a trend break, right? Like if you flip your chart, you'll see it. So control I, flip your chart for me.
Yeah.
Or I guess it would be maybe
This control. No, I'm on Windows, but that should have worked. Control I. No, why you're not doing it. Yeah. I get what you mean. Because I was just seeing the whole, okay, your whole, as you said, it breaks trend here to break it up here.
Yeah, yeah, and you definitely could have done that. You definitely could have done that. But alternatively, what could you have done? You could have used the hold level, break a trend this way, right? Same thing that we always do. We use hold levels to break trends. So, it dumps down to a pretty ridiculous hold level and then rips up and breaks trend. So where it looks like it's going up, remember, we always use these hold levels to break trend. So where it looks like it may be going up, right? If it were to do that, I would expect it to go to some ridiculous hold level and then break down in a big way. Just like it did here, right? It goes to its respective greedy level, holds the move, and then breaks right through trend with a fury. So say like the same thing happened in both scenarios. It's just, you're right. You could have went up to 73.60 here or whatever, 73.70. You could have went there and you're still at that maximum threshold. But that's a different piece, right? Like this is one maximum threshold. The next one is up there. So there's nothing in between those levels. So you almost have a gap between those levels. So like if it breaks over 73.13, it's just going to 73.60 or 73.70 or whatever that range we defined was. It's just going straight there because it's no longer saying we're laddering from here to here to here to here and through trend. It's breaking that ladder that it created.
But it keeps on breaking ladders here and here and here all the way along. So how do you know which is the right one?
Yeah, you're only on a 15-minute time frame though, so you have to realize that what might look like one piece of information on a 15-minute time frame, on an hourly time frame, the only thing you have there, see, like on an hourly time frame, you're not really. Scrub the slider for me on the right side so you can see the top and bottom. So if you scrub this for me so we can see the top and bottom. To here, to this section here, to this here. Like you can see the ladder down, and then if you just simply draw a trend from here to here, like that's all, you only have to draw one line. You can see the ladder down into the trend. Final hold of the move, which would have been here, probably back test that trend. So mark a hold level there. And then let's go see if it back tests trend on a small time frame.
Hit around here and went up to hit this particular hold.
It's still laddering down. It didn't even hit the trend. And this might not even be the right trend also. So let's be aware of that too, that this might possibly not be the right trend because we just marked the first thing we saw. You could adapt it to here. Might make it a little clearer. Perfect. So yeah. So you lose trend, right? Lost trend, you come back up, back test it, dump down off the hold level. So now go to your 15-minute chart. See what I mean about you hit the hold level, you bounce off the hold level, back confirm trend, which is also the back confirmation of trend here is also this right here, right? The hold range right there. Back testing trend off a hold level right before a big dump, right? Yeah, sometimes you have to understand what here, for example, you couldn't have gone over this point right here. Like you couldn't have, just like you can't really go over this point right here, right? Like those are kind of confining the move. And then like this is protecting the next leg right here. You can't go over that. And then you wouldn't be able to go over something like this right here. Now, whether these ranges get hit, you can use the candle or you can use the body. It's fine. But you can see where the ladder down is just like, it's giving you those very defined points, right? Like it's a very defined point that is saying either this is going to continue to hold the move down because and I think this is also what we talked about with Pat about working from the outside inwards. I think you're seeing a little bit of the same thing, right? Because if you're looking at these moves like this, oh, we're here and here. Here, let me delete the drawings. You're looking at this move here and saying, oh, wait a second, we're in this moment right here, and we're not testing this inverse. So what you're seeing is like this. You're saying, here's the inverse that has to hold the move down, and if this doesn't work, we're breaking the move, right? But meanwhile, it doesn't mean you've broken over the confine of this piece of it because these are your polarized moments, right? Like you could have possibly attacked this leg of the move right here. this, but you're still laddering down long term, right? So I think when you're looking at these trades, you're looking inside of this too much and expecting a long-term outcome off of a short-term resolve, because this is fine, and you're going to have this big move down, right? Like 73.98 to down here, fine. That set up the break of the move in the future because it creates this trend that you have. And once that trend is lost, you've already broken the move, because this is the hold level that gets hit that creates the trend. The hold level is on your chart. It's already tested, so you don't need to stop there again in the future. You're already testing the move to break up, so that when you break this trend, the move is done, right? So you're looking too much at this right here, saying, oh, here's the break level. Oh, we've gone above this break level. What's next? When really you should be saying, okay, we have this holding the move down here, like so, and then this piece of the move, if this is the top of the candle here, so let me redraw that. If this is holding the move down, like so, this is the top right here, it's still a ladder down, regardless of what it broke. It's still a larger time frame ladder down. Even if it tested this, I'm not sure. It didn't test this one right here. And it didn't test that. But even if it broke the move locally, it's still a longer time frame ladder down, right? Just like this one here will now be able to ladder off of that. So I think you're looking too much inside and building. I think you're same problem with Pat, right? You're building this inside, expecting the inside of a trade to give you your final outcomes, when you could have found these entries just by, we go back to this again, and we now seeing that, even understanding that if this is the top of the move here, where's your greedy level here? Like, you've got something right here, right? So if that's the top of the move there, and that's your hold level there, you've got those two same points we defined, which I believe is 73.18 and 73.19, right? So even you can mark two levels there and you'll see it, or 73.09 or whatever it was, right? And you can go and define them further in the chart. But the key point is this: you're still laddering off of this, no matter which break level you hit. You're still laddering. So working too inside of the move like that will blind you to these things. Because when we look back at this, now this is all very simple. We can all agree that this was a very predictable move. We have a trend, we have a ladder. These are all very simple things, right? But we don't see them if we work too much inside. We have to work from the outside edges in, because that's what allows us to understand the foresight of where something is moving. By understanding that we're laddering down here, in the way that we're laddering down, means that if this is true, like this is the golden information right here, all of that work that we just did, that means if what I've circled, if this is true and we do not pass this is the best entry we'll ever see in the future before a dump. Just like if we hit this level and it doesn't pass a 73.60 level, it is the best entry. No matter which way you spin it, it's going to be the best entry before a big dump. Just like right here, 73.88, the one that I love so much because it was back testing the range prior. If we get entry there, again, this is the best entry we can ever get before a big dump. So they all share the same thing. You're just taking entry lower and lower and lower. Or in this case, it's just the next, the second, the third, the fourth trade. Because really, this is trade 1 to here. This is trade 2 to here. This is trade 3 here. So you missed the first two trades. But the information still stayed the same the whole entire time.